ask the question, are our property markets a Ponzi scheme or a property bubble? Now, if you don't know what they are, I'm going to give you my definitions when I have a chat with Brett Warren, National Director of Metropole, in a minute. But the surge in property prices has locked out many potential first home buyers, and they're wondering, hey, is this all going to fall over as a property bubble, or is it just a Ponzi scheme being driven by immigration and it's not fair to us that baby boomers are doing this? Well, let's break that down and find out. So welcome to today's podcast, where each week, as you know, in the Michael Yardney Podcast, we help investors gain clarity amongst the confusion of all the mixed messages. I want to help you get clarity about this so you can develop financial freedom through strategic property investment and money management. Let's get on with the show as I have a chat with Brett Warren.
Welcome to the Michael Yardney Podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
One of the interesting questions on the internet forums and on social media is our housing market a Ponzi scheme? And I think this is a conversation a lot of frustrated young Australians are bringing into the fold because they seem to be priced out of the market. So to discuss what a Ponzi scheme is and is that what's happening with property, I'm joined by National Director of Property at Metropole, my business partner, Brett Warren. Hi, Brett.
Hi, Michael. Good to be with you. Yeah, look, lots to unpack. It's I guess, a term that's bandied around a fair bit, but particularly when you go through these kinds of price rises. So I think it'd be valuable to kind of unpack a few things and maybe bust a few myths in the process.
Well, interestingly, one of the blogs I just recently put up on the internet was a newspaper article from the 1970s saying that house prices were unaffordable for first home buyers. Now, the rules were very, very different in the 1970s, but I bought my first house then and your wife's income wasn't taken into account and loan to value ratios were different. But it got over 100,000 views, that Facebook post, Brett, because there were hundreds and hundreds of comments by I believe basically young people saying those older baby boomers don't understand what's going on. They've messed it up for the younger generation. It's not fair. And a few did mention the concept that it's all speculative based on more immigration coming in. Is that really true? Have we got a Ponzi scheme?
Well, look, let's rather than give advice, let's maybe unpack a few things. I guess, look, we're seeing this a lot with these types of things. But look, Michael, you could have taken that headline and put it out once every decade for the last 20 or 30 years. I think there's always going to be people that feel that way and have kind of missed the boat and things as well. So look, rather than I guess counter and fight and back and forth, I mean, the first thing is to really establish what a Ponzi scheme is, I guess. So, Michael, you've been around longer than I have. You've probably seen many Ponzi schemes. What actually is a Ponzi scheme, I guess?
Well, in fact, Brett, I sort of got involved in one when I invested in a gold mine in the early 80s where an investor took money in from investors.
Michael, was that the 1980s or the 1880s? Because there was a gold rush in the 1880s.
Actually, it was actually the late 1970s, really,
right.
when somebody was taking money in from investors to rekindle gold mines in Wedderburn, Ballarat, and his company was called Asian Pacific Mining Corporation. Very impressive for a young guy. And I lost $5,000 because he spent all the money. He kept putting money in from other investors and he spent it all and there was nothing left in the end. So $5,000 in those days was the equivalent of a car, but it was also the embarrassment of it. But it taught me that not everything that glistens is gold. But a Ponzi scheme is really a fraudulent investment scheme where returns are paid to earlier investors using the capital contributed by new investors. And that's exactly what, and I do remember his name, this guy Terry Malavi did. It was rather than from legitimate profits generated by the scheme. And what normally happens at the end is it collapses when they can't find new investors to keep it going. And it was initially named after Charles Ponzi, who in the 1920s crafted a notorious plot based on postage stamps. I don't really know the detail, but I read about it at the time. He promised investors huge returns, 50% in 90 days. In reality, all he was doing was using the money from new investors to pay the earlier investors, and it just collapsed, Brett.
Yeah, look, more recently for Netflix enthusiasts, the Bernie Madoff, I think it's the Monster of Wall Street. It's a really fascinating documentary about what happened there. And he was doing the same thing. He was taking money from new investors and forcing it out to old investors. And it just so happened that, I guess he had the ability to pay people out. But he was promising huge returns, outperforming the market. Look, it's a credit to him that he put it on for so long. Obviously, a lot of people lost a lot of money, which is very, very unfortunate. But if he actually put that much effort into a regular business, he probably would have done fairly well. But I think you're right, Mike. I think there's a few differences between a Ponzi scheme and the housing market. And I guess that's what we can kind of unpack and discuss. I guess the first thing is, though, to realise where's this frustration coming from and where are we getting the comparison to a Ponzi scheme?
Sure. Well, I think it's critics, particularly the younger demographics, who argue that our market's dependent on the continual population growth of Australia. And in particular, at the moment, they're talking about immigration. And also, they think, I guess that's a bit like new buyers coming into a Ponzi scheme. And if all of a sudden we stopped having immigration, we'd have a catastrophic collapse of our housing markets. And it's all fraudulent. I don't think that's the case. Well, I know it's not the case, Brett, because I think Australian housing market's underpinned by a number of strong fundamentals.
Yeah, I think so. And I also think that, look, a lot of that frustration, I guess, is probably from their own personal experience. Maybe they haven't got in a market or an opportunity when they could. They're getting outbid at auction. They're losing on the opportunity. I guess maybe it's a bigger discussion, Michael. Maybe the system's failing them because there are other ways to kind of, move forward and take action. But I think they're probably, I guess, fueling that frustration and lashing out in those kinds of terms as well.
I can understand that, but the statistics showed that last year in 2024, according to CoreLogic, there were 543,000 property transactions. Separately, the Australian Bureau of Statistics showed that there are 110,000 first home buyer loans taken out last year, not pre-approved, taken out. So 110,000 first home buyers got into the market last year, and that's about 20% of all the transactions last year, Brett. And that doesn't take into account all those first home buyers who were rent investors. So a lot of first home buyers, as you say, they're priced out of where they want to live, so they rent where they want to live, lifestyle reasons, and buy where they can afford to live. So yes, it's hard. We're not denying that. Has it always been hard? Yes, it has been. Should people be homeless? Should we have these other problems, rental crisis? No, that's not the sort of Australia you and I want to live in. But there are people still getting in the property market, Brett.
There definitely are. There definitely are. And look, I think there's a few differences between, a Ponzi scheme and I guess our property markets. And first of all, I guess it's a tangible thing, right? I mean,
Yes.
When you're buying a home, you've got a home. You've probably got a mortgage against it. You can, touch it, feel it, all those kinds of things. And I think, I guess around 70% of people who are in the market, they're not speculative, they're not investors. They're actually people who are buying a home. The high proportion in the Australian property market are actually owner-occupiers. So it's not like a Ponzi scheme where 100% of people are looking to speculate and make money and things like that as well. I guess in other countries, there's a much lower, owner-occupier rate overseas, and I guess that leads to bigger bubbles and I guess more speculation in housing markets and lower price rises. But most owner-occupiers have had a really fair head start on their mortgage, and around half of the owner-occupiers in Australia probably have zero to low debt levels. So it's certainly not a bubble, and we know that there's $11.1 trillion worth of value in that market, but there's only $2.4 trillion worth of debt against it. And that's a very, very low 23% loan to value ratio. And I think any business person or bank would be very comfortable at that level.
So I guess the first point why we both agree it's not a Ponzi scheme is there's actually something tangible. With the Ponzi scheme, there's no asset that people own. And it's not speculative investors that are driving the market. It's owner-occupiers. And that, overall, there are some areas that are being driven by investors, and maybe we can have a chat about that. But overall, the large percentage of owner-occupiers actually stabilises, underpins the market. But I guess that's part of the reason why your team at Metropole, with the research team, look carefully at areas which are not driven by investors, but are actually more underpinned by the stability of owner-occupiers.
I think it's so important because the stability of owner-occupiers, they're long-term thinkers. You know, if there's a financial crash or something happens tomorrow, they'll do whatever they can. They'll eat Maggi noodles for 6 months to kind of get out and pay the mortgage and make sure that their family's secure. Whereas if you're buying in these other areas, I mean, investors are getting in and out of markets all the time and changing things. And, if you're getting into an investor-dominated market and the wind changes and everyone pulls out, all of a sudden you're maybe in strife and you're trying to pick the next hot spot and all those types of things. So it's a very, very different market, the Australian property market, to most. And with that level of high owner-occupiers, it's quite safe, because the other key factor, Michael, also is that employment is the strongest it's been for quite some time. So everyone has a job who wants a job, and there's probably more jobs available. So those types of things, people can keep paying their mortgage. There's more stability there. You're not going to lose an asset and lose out on those types of things. We've also got, immigration. Australia's a growing country. That's not going to change in the next, probably 10 or 20 years. I mean, other markets and other countries have probably leveled out and are peaking, but Australia does still have that strong drive and immigration coming through to keep the market particularly strong.
And that's not going to go away despite an election year and both sides of politics talking about, are we going to have a few less students and a few less that? We needed. You and I work closely with Simon Kirstenmacher, and demographics shows that with the ageing baby boomers and people moving out of the workforce, we need to replace them. And we're just not replacing enough skilled workers at the moment. So Australia is built on immigration. So that's not going to go away.
No.
So someone would maybe then say, well, okay, it's not a Ponzi scheme, Brett, it's a bubble and it's going to burst. In fact, I was, headlines do attract even my attention. And I listened to a podcast only today on my walk with Lincoln about the property boom ending and the bubble ending in Perth, and in particular is what they're talking about. So are we in a bubble?
Yeah, look, I guess that's the next thing, isn't it? There's also people throwing stones about saying a bubble on the housing markets is a deck of cards and things like that as well. I think those kind of markets, it could be true if there was nothing underpinning those markets, and that they were trading properties and things. But again, it's an owner-occupied market, and I think to distinguish a bubble, in my mind, you'd probably have to lose at least half of the value of the property to be considered in a value, and I just can't see in these amazing locations that all of a sudden you can go out one day and get a $5 million property for $2.5 million. So I don't think it's a bubble either. And Michael, you can help me out here. I think that the biggest the Australian property market has ever fallen is roughly not even 10%. It's roughly about 10%.
Exactly right. Yeah. And that wasn't the whole market. It was several segments of it. So I guess a bubble means it's significantly overvalued, so that when the bubble bursts, property values drop. There's no doubt that Perth property values, Brisbane and Adelaide, have almost doubled over the last 5 or 6 years, but that's after periods of not as much growth, and they are underpinned by the large number of people who still want to get into the market. And even if half of them drop out for whatever reason, there's more people wanting to buy than are not. So therefore, will property values drop? Well, it depends who you listen to. They have been dropping 0.5%, not 1% over the months. Melbourne dropped about 3% over the last year. That's not a bubble bursting. That's the typical, regular, cyclical up and down. Every state has periods, long periods, often 5-6 years of no growth, and then it reverts to the median. So I don't think we're in a property bubble because of all the things that you've said, the shortage of properties, population growth, the Australian psyche. Australians want to own their homes. That's very different to overseas, where in Europe and a lot of other countries, they don't expect you. They're happy being tenants all their lives.
Very aggressively too. It's a high priority for a lot of Australians to have that backyard, and I guess that's fueling a lot of frustration for people who can't do that. So, but Michael, look, there have been housing Ponzi schemes in the past, hasn't there?
Well, property booms usually start with a genuine rise in housing demand, and sometimes they do turn into speculative bubbles driven by the expectation of higher prices rather than being based on genuine fundamental values. Maybe what I didn't say correctly a minute ago was another reason why it's not a bubble is because you can, in general, buy properties below intrinsic value at the moment. You couldn't replace them if you bought the land.
Good point.
And building
Good point.
costs are not going to go down. You couldn't replace most properties at the price you can buy established properties for. Another reason why it's not a bubble. But during speculative booms, what happens is that people pay above intrinsic value rather than being based on the genuine need for accommodation that we've been talking about. It's really more speculative. And when this happens, I guess we do sort of have the makings of a property market Ponzi. Now, this was clearly evident in the property mining boom over a decade ago, which was driven by the speculation of investors. They were looking at properties far away with the expectation of continual rising rents and prices. Of course, that mining boom finished in, I guess, a property Ponzi collapse, didn't it?
Yeah, it did. But it's quite interesting you say that because it is the investors these speculative investors that drive those type of markets. So I think there's a lesson there with regards to Ponzi schemes and stuff as well, but also for the average investor listening. I think it's owner-occupiers that drive the market, isn't it? Owner-occupiers drive that market. I mean, you can look at Perth, you can look at those Adelaide markets. It's the owner-occupiers that have pushed that market forward, and then it's really the end. The investors come in, and we're seeing that in Perth at the moment, Michael, aren't we? We know a good agent, a client of ours over there that works in that market, and he's seeing the owner-occupiers stop buying. It's the investors that are piling in and fueling that more speculative kind of market. So it's a dangerous point if you're an investor, if you're following other investors at a higher level into those kinds of markets.
Well, Perth is a very large market. I know that there are, and I don't want to call them Ponzi schemes, but speculative bubbles occurring in a number of regional parts of Australia and also specific segments of the Perth, Adelaide, and we know the Brisbane property market where a lot of the younger, inexperienced buyers agents were pushing people into Logan in Brisbane, for example, which has a lower socioeconomic profile. But if a lot of investors drive that,
yes,
all of a sudden, it's no longer based on fundamentals. They're hoping that, hey, but they were right because property values went up. Yes, they did because of the sort of Ponzi scheme of more investors coming in underneath them, seeing that all of a sudden property values have gone up, Brett.
It's a really good point. And the other thing that really annoys me, Michael, is people saying, I bought a property in Brisbane, but Logan's not in Brisbane, Toowoomba's not in Brisbane, Townsville's not in Brisbane. It's amazing how they use the Brisbane, I guess, to justify the safeness of the environment or the effectiveness of the investment. So you're 100% right. So, Michael, what's the bottom line? Is it a Ponzi scheme?
Before we can continue on that frame of mind, that thought, I should say, I've listened to other podcasts as well, and there's some really, really good advisors out there putting strategic plans together for clients and also buying good properties. But there's some interesting ones because at the moment, a number of them are suggesting it's now time to get out of Perth. It's now time to get out of Brisbane because their philosophy is one of trading. And if they all leave, there could be a collapse. There's not going to be one in Perth.
No, not in the bigger markets,
If there are not another new wave of buyers driven, because there's some buyers agents who say they're buying 50 to 100 properties a month. I don't know whether that's true or not. At Metropole, we're very busy and we don't do anything like that. But the concept is that if you've got so many of them going to the same area because they're all looking at the same data, you're pushing up prices. And when that stops, the locals aren't going to pay those prices anymore, Brett.
It's a dangerous game. It really is. It is highly speculative. And property investing is a very, I guess, expensive game. You've got to pay capital gains to get out. You've got to pay stamp duty to get in. So, when you do get out, it is a big step backwards. And I guess for us, the purpose of investing is, longer term creating wealth. And again, that just gets back to trading time for money and hoping that the next market will do well. And I know in experience, Michael, people that are getting it right in the last 5 years are probably in for a bit of a rude awakening in the next 5 years because the markets aren't going to be the way they have been. I think at some stage, maybe one or two steps ahead of this game, you do get caught out and you do end up coming back to where you are. And I often hear you saying, it takes 30 years to become financially independent because I think it actually takes an investor, probably one or two errors and failures in the market to actually understand you're just better off holding, getting your money into an amazing location and holding for the longer term and not trying to speculate. Because the truth is, even someone like you, Michael, been in the market for 50 years, you don't even know what's going to happen next. You've got a great, probably more concept and more perspective than others, but you wouldn't go and put your money on it, would you?
Well, you've got to be careful because there's always X factors, things coming out of the blue. We've got a federal election coming up, so what's that going to do?
Yep.
What's the new promises they're going to make for all those things? So on that basis, take a long-term view. So you asked a moment, well, what's the bottom line for all this? I think it's encouraging to understand that our housing markets are underpinned, as you've said a few times, by the stability of such a large percentage of owner-occupiers who purchased a home to live in rather than looking for capital gain or looking for cash flow. And they're resilient because they're underpinned by the strong fundamentals of owner-occupied properties, as we said, low debt levels, strong economic and employment growth, and the growing population. There's no doubt that there are risks, though. So one can't invest anywhere. You can't just buy any property and hope it's going to work. And even in the right locations, you can't just buy any property. So I know our teams at Metropole, and you and I have only this week spent hours pouring through the research and looking to see. And while some areas are looking good and interesting, one of the things that the data doesn't bring up, Brett, that a lot of these young people are suggesting, let's buy there because they're undervalued, they forget about one major factor, don't they?
They certainly do. Well, it's the same factor that you had when you came to Brisbane. You and all the data, the facts, the numbers. You knew absolutely everything to where to invest and what to invest. But the thing you didn't have was that on-the-ground experience, decades of experience to know the right side of the road from the wrong side, the stigmas attached to certain areas, and the school catchments and those types of things. So it's perspective, Michael. In a word, it's perspective.
And the other thing they often miss out on is the demographics. And again, it's not a judge of people, but if you invest in areas which is dominated by investors, you have a different demographic of people there who are maybe not looking after their homes as well. The curb appeal isn't the same. When you sell, it's actually a little bit harder to sell. Property values don't go up as much. So apart from looking for the numbers and figures, one has to actually understand, again, it's not a judge of people, but who's going to be there, because your future income is going to be dependent upon your tenants being able to keep paying you higher rent over the long term. So if you're interested in taking advantage of this new phase of the property cycle, and Brett, I believe with the first interest rate drop that's occurred and future ones coming, the first one's going to stabilise our markets a bit, and future ones are going to take the market to the next phase of the cycle. There are still some great opportunities for people out there. Well, not still. Sure, you should have bought 20 years ago or 4 years ago, but you can't just buy any property. So it all starts with a plan. So your team starts by putting a plan together, and then we're much more than buyers agents at Metropole. We'll help you implement the plan. But first of all, we've got to understand what's right for you at your stage of the journey. Actually, only yesterday I heard of somebody who had 1,000 people at an event on the Gold Coast, at the end of which they sold out a whole new off-the-plan apartment building. True story.
Yep.
I won't say who it was. He's done very well. Will the clients do very well? Is it really possible that all the 120 people who bought a property, it was the right one for them?
It's
as
interesting,
opposed
isn't it?
to all the other properties.
The answer is no. It doesn't start with the property, and I'm highly doubtful that that's the case. I think the other thing, Michael, now's the time. You mentioned risks and those kinds of things. Now's the time to actually, the best form of offense at the moment is defense, because you could have bought anywhere and done well, and it's a rising market. Everybody does well, but now you've really got to be specific with what you're doing. You've got to have a plan in place. You've got to understand these little intricacies in the market to make sure that you're getting above average rates of return, but also you're protecting your wealth as well, because it's likely we're going to have some kind of correction, or most of the market.
Well, it can't keep going on as long as it has. And you're right, Brett. So the plan tells you what to do, but just as importantly, it tells you what not to do, because we know the landmines ahead. So if you're interested in taking advantage of this next stage of the property market, I'll leave a link in the show notes. So just go to metropole.com.au and have a chat with one of our wealth strategists. Find out about what your options are, and if it's appropriate, they'll explain to you how a strategic property plan is step one of a multi-phase, multi-year process of building wealth. It's buying a property is not a plan. Doing research on the internet is not a plan. Going to open for inspections isn't research. It's got to be much deeper than that, because we're not going to be covered in the next years by the strong growth that we were in the last couple of years, are we, Brett?
Absolutely not, Michael. Well said.
Okay, well, thanks a lot. So I guess the conclusion is Don't worry, we are not in the middle of a bubble or a Ponzi scheme, other than in certain locations that may find a bigger correction than others. Look forward to our chat next week, Brett.
Thanks, Michael. Good to be with you.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
In my mindset message today, I want to speak to you about your most valuable asset. And when I speak with clients, I often ask them, what's your most valuable asset? And they often say something along the lines of my wife or my husband or my life partner, because I think they think that's the right answer. And then I say, no, and then they mention the property. And in fact, I correct them and I say, you are your greatest asset. Invest your time, your effort and your resources into nurturing and encouraging this invaluable resource. For a lot of people that we see at Metropole, they've got 20, 30 years to live. So their big asset is the time that they've got, the income that they're going to earn to use over the long term to build a substantial property portfolio. And in fact, that's an asset that needs to be insured. So in this mindset message, I want to discuss talk about this a little bit with you because, in fact, your time is probably your most precious asset. It's irreplaceable. Oh, by the way, it's finite. I mean, we don't know when that's all going to end either, as unfortunately over the last few weeks I found out with a couple of close friends and the father of one of a good friend as well. You never know when it's all going to be over. But interestingly, I've found that the difference between those who achieve success and those who don't lies in how they utilize this invaluable resource, their time. It's about the knowledge that we acquire over time, the skills we develop, the relationships we build, and the ventures we undertake. And for many of you listening to this, watching this, it's also about how you strategically invest in property using that time. Now, I have many mentors, and in the early days of my investing career, I went to a number of Tony Robbins seminars. I even did the fire walk where you walk over the coals. And Tony Robbins said, setting goals is the first step into turning the invisible to visible. I mean, I'm just talking about that fire walk. I wasn't going to walk over the coals. I'm not stupid. I let the other people do it. But his metaphor, I guess, was if you look at the green grass ahead rather than the hot coals underneath, you can achieve anything. And I know walking through that gave me the confidence and gave Pam, my wife, the confidence to achieve our goals, which we have achieved, much more than achieved. And interestingly, that's why at Wealth Retreat, we're dedicated to helping the guests there make the most of their time and focusing on what truly matters. Because you see, Wealth Retreat is not really about a property seminar, even though we spend a lot of time talking about property. Over 5 transformative days on the Gold Coast, we immerse the people in a powerful environment designed to help them break free from their limiting patterns, their beliefs, and rekindle their ambitions and chart a course for an extraordinary future. And that's why in every podcast I have these mindset messages, because I genuinely believe that it's actually mindset that differentiates the average person from the super successful people, however you define success, whether it's in sport. And we know in golf, my wife Pam tells me that it's a game of mindset more than skill, and in other areas as well. So the concept is that you need to enhance your empowering beliefs and get rid of limiting beliefs. Even all the very wealthy people who come to Wealth Retreat have disempowering beliefs, limiting beliefs, and many of them imposter syndrome. So that's why the theme we run at Wealth Retreat, and I'm suggesting that you think similarly, is where are you going to be in 5 years' time? Now, interestingly, that's going to be in May 2030 for the people who come to Wealth Retreat this year, but not just in money, not just in wealth and investing, but in all areas of your life. So what we do is we talk about health and spirituality and contribution and recreation and family and growth. So true wealth, I spend a lot of time talking about money and property, don't I? But I want you to remember that I believe true wealth is what you're left with when they take all the money away from you. And I hope that never happens. And it's all those other things as well. So I'd love you to consider joining us at Wealth Retreat, because you can get, first of all, some clarity, gain deep understanding of your goals, desires, and actions required to achieve them. In other words, you come in with a whole lot of ideas, but you're actually going to go out with firm plans. You're going to have actionable plans, defined objective timelines, and step-by-step strategies. And I always speak with people afterwards, giving them one-on-one sessions to make sure that they follow through. And we're going to help you maximize your potential, learn how to concentrate your efforts on the pursuits that lead the highest yields for both wealth and personal satisfaction. And you're going to get inspiration and guidance from many successful investors, entrepreneurs and thought leaders in Australia. But the big thing is gaining a network of and community of like-minded investors and business people. Hey, don't count yourself out. But interestingly, one of the biggest challenges I've seen investors have is not having the right peer group around them. So let me ask you a question. Is your peer group going to get you to the next level? So by joining us, you're going to be amongst a select group of motivated property investors, entrepreneurs, business people, all committed to elevating their lives, their investments and their business. And they leave their Superman capes at the front door, so there's no egos. So, and we've got the faculty of experts, property, tax, finance, business, providing you personal mentorship. So if you're interested, go to wealthretreat.com.au and express your interest. And let's have a chat and see if it's suitable for you. And don't let indecision and hesitation hold you back. Interestingly, only this morning I was speaking to somebody who listens to this podcast, so I won't say his name, but he knows who it is, who said, yes, I'm coming this year. But interestingly, he'd been looking for the last 3 or 4 years to come. And I said to him, what have you lost by not coming? Sure, you've done really, really well, but what have you lost by that level of indecision? So my mentorship session for you, and sorry I got sidetracked a bit with Wealth Retreat, but my mentorship message for you, my mindset message for you is time is your greatest asset. Well, you are your greatest asset, and time is a subset of that, isn't it? So create a fantastic future, one that you're excited to live in. So invest in yourself. Now, you're doing this by listening to my podcast regularly. You're doing this by listening to others, and also be careful you listen to, of course, by getting my daily property update newsletter. But my suggestion is you consider investing 5 days in yourself at Wealth Retreat. Have a great week. Make it a great week. Thank you for spending the last little while with me. I hope you got some benefit from this show. But before you move on to the next podcast you're going to listen to, let me remind you I have another show that I produce once a week with leading demographer Simon Kirstenmacher. We call that Demographics Decoded, where Simon and I unveil the trends that are going to shape your future. In my mind, this is a must-listen to podcast for anyone interested in property investment, but also for business people and entrepreneurs. So if you don't currently subscribe to Demographics Decoded, just please stop for a second and subscribe on your podcast app where you're listening to this, or on YouTube. And of course, if you don't subscribe to this show, the Michael Yardney Podcast, why not click the link that says follow or subscribe wherever you're listening right now. So twice a week, you're going to get benefit from my guests and me. Oh, and I'd like to ask you a little favour, please. If you did enjoy today's show and you know somebody who would also benefit, please tell them about the Michael Yardney Podcast and Demographics Decoded. There's a share button on every podcast app. On Apple Podcast, there are 3 little buttons at the top of the player. Well, just tell them about it. Just have a chat with them. Now, I hope you're going to be doing them a favour, and you're definitely going to be doing me a favour in my quest to help as many people as possible to become financially literate. And by the way, I've got a special bonus for you. As my way of saying thank you for subscribing, just go to podcastbonus.com.au. There'll be a link in the show notes, podcastbonus.com.au, where I've got a bunch of ebooks and reports. It's just my way of saying thank you for taking the time to listen. And remember, the information that we give you in this podcast is general information, not specific information about your personal circumstances, because we don't know about them. But if you do want specific information, you can always have a chat with my team at Metropole. Go to metropole.com.au. If you really want to learn more, you can always listen to the previous podcast, the many episodes we've already published. Just go back to the old episodes, which each have lessons about property investment, success, and money. Once again, thanks for listening to today's show.
Thanks for listening to this episode of the Michael Yardney Podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney Podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?